quiet crisis is hitting the American housing market right now, and it has absolutely nothing to do with high mortgage rates or home prices. Instead, it is a silent financial trap that is making the American dream physically impossible to protect. Across the country, the national average for home insurance has officially smashed past $3,000 a year. In premier markets, premiums are skyrocketing past $8,000 if you can even find a company willing to sign. This isn't just a minor issue for disaster zones. It is a structural wall for the entire U.S. economy. Here is the math. If you cannot get property insurance, commercial banks legally cannot approve your mortgage. And when mortgages freeze, local property values hit a sudden, unavoidable brick wall. Mainstream media blames this entirely on changing weather patterns, but corporate insiders know the real truth. They aren't running away from the weather today. They are fleeing a hidden financial calculation that changes everything. To understand how we got trapped, we have to look behind closed doors. It started as a warning shot. In mid-2023, State Farm, the largest property insurer in California, abruptly announced it would stop writing new policies. Mainstream news treated it as a temporary corporate dispute. It wasn't temporary. By 2026, the quiet retreat turned into a total evacuation. Allstate, Hartford, and 7 of the top 12 insurers followed them out the door, leaving an entire multi-billion-dollar housing market completely exposed. When a giant leaves a market, they don't give a speech. They just alter their algorithm, update their risk maps, and quietly turn off the tap. But if you think this is just a California problem, you are wrong. Take a look at the data. Florida and Texas are seeing major companies leave entirely. And the crisis is now moving straight into the middle of America. The cause is not massive hurricanes. It is severe wind and hail storms. In 2025 alone, these normal storms caused $61 billion in insured losses globally. The old insurance system was simply not built to pay for this much damage. For a normal homeowner, this crisis usually starts with a letter in the mail. It is called a non-renewal notice. It means your policy is officially canceled. Not because you missed a payment or because you filed a bad claim. Insurance companies are now using satellites and drones to look at your roof from space. If their computer program decides your neighborhood is too risky, they drop you. To survive, families are forced to buy from smaller, backup insurance companies. But these backup plans charge double the price for half the protection. And as these prices explode, they trigger a massive trap inside your local bank. A trap that connects directly to your mortgage. Here is the biggest secret about buying a house. The people who lend you money do not actually care about the changing weather. But they care deeply about one strict rule. By law, if you do not have home insurance, they will not give you a mortgage loan. In the past, insurance was just a tiny fraction of your monthly house payment. But today, because those costs are exploding, regular families can no longer afford the total monthly bill. When average buyers cannot afford the loan, houses just sit empty. When people cannot get loans, the number of buyers completely collapses. To finally sell, the owner is forced to drop their asking price by tens of thousands of dollars. And when one house on your street sells for cheap, it drags down the value of your home too. This is the mortgage death spiral. We are seeing hardworking families lose their life savings. Not because of a storm, but because the cost to protect the home has broken the system. When you pay your home insurance, you think the money stays with your local company. But local companies do not actually have enough cash to pay for a massive, statewide disaster. So, to protect themselves, your local insurance company buys their own insurance. It is a hidden global system called Reinsurance. These are massive global banks located in places like London, Bermuda, and Switzerland. And they secretly control the price of every single policy in America. These global banks use massive supercomputers to predict the future. They do not just look at your local neighborhood. They calculate risk across the entire planet. Recently, their computers ran the math on America's aging power grids, rising inflation, and severe storms. The math came back with a terrifying answer. The American housing market is too risky. So, the global banks instantly doubled the price they charge your local insurance company. And your local company has no choice but to pass that massive cost straight down to you. You are not just paying for local weather. You are paying for a global financial panic. We are now watching the physical map of America being completely redrawn. Experts call this geographic sorting, and the reality is brutally simple. Normal, middle-class families cannot afford to just pack up and leave. They are trapped in high-risk zones, forced to pay completely unaffordable insurance bills. But the ultra-wealthy are playing a completely different game. They are buying luxury houses with pure cash. Because they do not need a bank loan, they are not forced to buy insurance at all. They are simply taking their money and moving to the safest, lowest-risk parts of the country. This is creating a country permanently divided into two distinct zones. Those who have enough cash to escape the storm, and those who are left behind to pay for it. But the wealthy think they are safe. They are not. The banks they left behind are holding $1 trillion time bomb. When those empty mortgages collapse, the shockwave will hit everyone. We are exposing that exact trigger soon. Pause for 1 second. The system thrives on you looking away. Share this warning, drop a like, and hit subscribe so you are never caught blind. This is America Explained.